Meta Platforms, formerly known as Facebook, is a leader in the advertising space. Their stock was down 76% from all-time highs, and now it's up 65% from its lows. In today's video, we'll be answering the question, is Facebook a buy? Or has it gotten too expensive again? We're going to be looking at Meta's most recent earnings report, their growth story, and finally, we'll take a look at their financials to come up with a fair value to buy the stock. Before we get into it, this video is not financial advice and is made for entertainment purposes only. First off, let's take a look at their most recent Q3 earnings report. To be honest, the report was not good, and the stock tanked 20% because of it. Their revenue was down 5% year over year, from $29 billion last year to $27.7 billion this year, and even worse, their net income collapsed 50% from $9 billion to $4.4 billion. Let's dig in a little deeper to see what's really going on. First, let's address their drop in revenue. It says here on Facebook's report that if it weren't for currency conversions from a strong US dollar, their revenue would have been up 3% year over year versus being down 5% year over year. This is something that's been affecting the majority of multinational corporations. A strong US dollar means every other currency is weaker, and when companies operate overseas, they get paid in foreign currencies, which is now worth less. And in terms of their revenue, advertising is slowing down, and this is something we normally see in an economic slowdown. I also believe that advertising will be slow through all of 2023, and maybe start to pick up in early 2024, or maybe even Q4 of 2023. In terms of their free cash flow, it's also not looking too good. Meta went from generating $8 to $9 billion in free cash flow per quarter to essentially breaking even in Q3. Remember, free cash flow is a company's bottom line. It's used to buy back shares, pay dividends, or reinvest into the company. In Meta's case, they've been heavily buying back shares and heavily reinvesting into their business. So, what are they investing all this money into? Number one, we have AI Discovery Engine. This is essentially the algorithm that works to recommend reels, videos, and pictures on Facebook and Instagram. Number two, the metaverse. Facebook's management has been dumping a lot of money into the metaverse. Number three, their legacy business. So they're continuing to reinvest in their legacy platforms like Facebook, Instagram, and WhatsApp. So that's something that's good to see. Now that we've talked about their earnings report, let's dig in a little deeper to find out how their growth story and profitability will look in the future. First of all, Meta has been seeing a stagnant number of average users per month. The Facebook family of apps has over 3.5 billion monthly active users. That's almost half the globe. This makes it very hard to grow their user base. To fight that, Facebook has consistently increased their average revenue per user. This is something investors love to see, because it essentially means that even if user growth is stagnant, Facebook is still able to grow their revenues by optimizing their average revenue per user. The second point is, Facebook still has a lot of room to grow internationally. There are many regions around the world that still don't have internet access. These regions will be key for companies like Meta and Google. Even though their user growth has been stagnant in the major economies like US, Canada, and Europe, Facebook is still seeing rapid growth in developing economies, especially in areas where the middle class is growing quickly, like the Asia-Pacific region. Now, let's talk about Facebook's investments. As mentioned before, they're mostly investing into their AI to improve their algorithms, as well as heavily investing into the metaverse. The AI investments have been used to build their algorithm to be more adaptable and favorable for users. This investment has been paying off. There are now 140 billion reels played across Facebook and Instagram every day. That's a 50% increase from just 6 months ago. I think this is very nice to see. It makes me confident that Facebook and Instagram are able to compete with TikTok, which has been stealing market share from its competitors. And finally, WhatsApp. WhatsApp is super popular anywhere outside of North America, and Meta has finally started to monetize it. After WhatsApp entrenched itself into the lives of billions of people, Facebook is now allowing businesses to send advertisements on it. It's growing at 80% year over year. Number two, let's talk about the metaverse. We have to acknowledge the risks of the metaverse. Facebook is investing tons of money on a project that is losing more and more money every quarter. Is this necessarily a bad thing? No, but it doesn't look promising yet. I've tried the Oculus before, it's a really neat product, and I do see some use cases, but I don't think it's this revolutionary product that's going to change the way we live. The good news is, Facebook has tons of cash on their balance sheet, so they will be able to take a hit to their margins for a few years, but it still is a risk. If management keeps pouring money into this project for the next 5 years, and the metaverse doesn't turn out to be profitable, we're looking at a much weaker business. To summarize these points, Meta is seeing stagnant growth in North America. Their way to combat that is to increase the average revenue per user, which they have been doing successfully. The other way of fighting that is to increase their user growth in other areas of the world, which they've also done successfully. Number two, they're investing lots of money into the metaverse and into improving their algorithms. The metaverse investments have not paid off yet and are not expected to pay off for another few years at least. The algorithm investments, however, are paying off massively. With that, let's take a look at some numbers to see how Meta has done historically. Number 1, Meta has a phenomenal balance sheet. Even with all the buybacks and investments they've been doing, their cash position is still really strong. Number 2, management has proved time and time again that they know what they're doing. They've consistently acquired businesses and found ways to monetize them for great returns, and this is shown by their high return on invested capital and their return on equity. Number 3, their free cash flow margin and net margin have historically been around 35% versus what it is now at 22%. The question you have to ask yourself is, are the margins going to stay down here? Is Facebook's legacy business any weaker than it was 2 years ago? Finally, let's come up with some assumptions to see if Facebook is a buy today. Before we do that, if you're enjoying this video, don't forget to like and smash that subscribe button. Quick disclaimer, I do have a position in Meta. For these assumptions, I'm going to be going a little bit conservative. I'm going to assume that the metaverse will not pay off for the next 5 years. Meta currently has revenues of $118 billion. I'm going to assume a growth rate of 5% for the next 5 years and a free cash flow margin of 25%. Again, these assumptions are very conservative. We're assuming that the metaverse will hurt their margins and not contribute anything to the top line. At a price to free cash flow of 15 and a discount rate of 10, we get to a fair value of $131 per share. I think if you factor in their balance sheet and the fact that they're buying back shares, this stock is a buy, especially considering that we're assuming the metaverse will be a complete flop. Oh, and if you want to use this DCF model, check the description down below. So, Meta Platforms does seem like a good deal here, but the risks are present. With higher interest rates, inflation, a recession, and huge investments into the metaverse, I wouldn't be surprised to see more pain ahead. And with that being said, we're at the end of our time today. I hope you found value and enjoyed this video. Don't forget to like and subscribe. Peace.